Hello trading friends and welcome back to Forex Focus, brought to you by tastyfx. Today we are digging into some cross-currency Forex pairs in light of the recent lull in US dollar-based pairs. Just as a quick aside before we dig into a bunch of the action we're seeing in these cross currencies, I do want to just quickly define what makes something a cross currency pair versus anything else. And in our US-centric world here, it is quite literally any currency pair, Forex pair, that is taking the US dollar out of it. So your Euro Sterling, your Euro Yen, your Sterling Yen, some of the major cross-currency pairs, and we'll dig into a couple of those in just a second, but also some of the more exciting ones extend to commodity currencies like Australian dollar and Canadian dollar, or even the Australasian cross currencies like Australian dollar and New Zealand dollar, which is also a really, really interesting one of late. So why would we be digging into this now? And with this premise of, will cross currency pairs become more and more important here in the next handful of months and years of trading, as we have been so US focused since the pandemic, really focusing on euro dollar, pound dollar, dollar yen, and so on and so forth. Well, one of the pieces here is that US dollar volatility is really, really close to its lows for the last several years, and those options traders out there might know this type of stuff, but I'll go through it really quick. Volatility tends to have a floor to it because it is a measure of price movement, right? Or when you're talking about implied volatility, that's derived from options prices and the theoretical amount that the options market thinks that prices will move. And so with that, you don't tend to see any markets that have a 0% volatility, right? That would mean that the market opens the day at 100 and closes the day at 100 every single day. Not a market that anybody would be really looking to trade there. So there usually is a floor for volatility in the stock market. Oftentimes it's around 7, 8, 9%. In the Forex community, it's a little bit lower. Currencies tend to move less than stocks. And so you have a floor around 4, 5, 6%. A lot of times, and you can see here very close to 6% even, and really the lowest amount that we saw in this chart is right before the pandemic, down close to 5%, but since the pandemic has been around 5.5, 6%. So we're really close to some of the lowest volatility levels for US dollar here, looking at the USD vol index, and we've traded up above 10%, up above 12% multiple times in the last couple of years. Now, these things do have a way of mean reverting. At some point, will dollar volatility come back? Yes, it's very likely. It's never historically happened that volatility of any market, stock, Forex, or otherwise, has gone low and just continued to go lower until it approaches zero and stays there. It'll come back, but it's not there right now. So thus, we look for other avenues for price action, volatility, back and forth, whatever you want to call it, opportunity as traders, the flows have not been there for US dollars. So let's take a look at our first cross currency, and we're gonna harp on the yen. And before we do look at the pound yen, Euro yen, I just want you to take a look at the last several days of this dollar yen, and I'm sure if you've been reading the news around Forex, especially major Forex pairs, a lot of yen in the news given the price extremes. And now this dollar yen piece is no stranger to price extremes. They hit 160 for the first time in more than 30 years just a handful of weeks ago. But if you look at here, the hourly chart for the last couple of weeks haven't moved much further from there, really been stuck in this range of 160 to 162. not moving in one direction or the other, not getting the extension through 162, maybe onto 165 area, and not getting the mean reversion down to 155, 150 would have been more normal prices historically. And now let's take a look at the same time frame, same hourly chart the last couple of weeks, but in a cross-currency pair, sterling, yen, very different, very volatile, ripping through multi-year highs here, getting on beyond the 200 price level, so 200 yen per pound there, and continuing to 202, 204, 206, and now trading close to 208 for the first time in, I think, going back to 07, 08 range. And then also, if you look at that euro yen on your own, very similar, continuing to see volatility, continuing to see price extremes that forex pair hasn't seen in decades. And so you get a little semblance of even the most volatile dollar-based pair not seeing as much volatility as some of the crosses. And something to keep in mind, because we're about to dive into some maybe even more volatile crosses, some more minor pair-based crosses, is that the major pairs really at the end of the day consist of dollar, pound, euro, and yen. And so when you're talking about major crosses, you're really talking about any of the permutations of those last three, right? The pound, the euro, and the yen. And so already covering a lot of those bases, and we'll actually round that off with the euro sterling pair, which has actually also seen some volatility. I was surprised to see this piece here because you would have expected, well, the euro is kicking the yen's butt and the pound is kicking the yen's butt, so it must be probably sideways action between this cross. Not so much. The pound has been sneaky strong here, and of course if you're looking at pound versus the dollar moving beyond 128, close to 130, that is the highs for the last couple of trading months here. But euro sterling breaking down below 85, and the potential to break through those lows. You can see 84 is around the low for the last year or so of trading, but 80 even is the low since 2016. What was going on in 2016? Well, that was the Brexit fallout, right? So that was when the pound was really getting hit on all fronts. Really interesting territory in this pair. If you think that this pound is finally regaining some of that status since the Brexit, you know, maybe selling these 84s and continuing this trend, there's something to that. Now, if you think there's mean reversion to be had, and this, you know, market has obviously bounced off of 85 or 84 or 86 a handful of times in recent years, then maybe a mean reversion play. Either way, you're getting some extreme price action, even in this euro sterling pair. And now you're going to see some really interesting stuff as I throw Aussie into the mix. The Australian dollar has also, similar to the pound, seen some sneaky strength against, yes, the US dollar. It's trading above 66 cents, which is, in the grand scheme of things, still pretty historically low, but it's not as low as 63, 64, where it's been trading in recent months. But looking at these longer term charts, and we'll widen out that Aussie Kiwi in just a second, you're seeing either multi-month or multi-year price extremes for this Australian dollar against the New Zealand dollar. Of course, those two economies very closely intertwined, but also the Canadian dollar. You might say, well, Canada's nowhere near Australia and New Zealand, but they're both commodity currencies, and one of the biggest cross-currency trades historically has been that Aussie CAD. That market getting to, like I say, multi-month extremes there, even though Canadian dollar usually is highly correlated with US dollar, and though Aussie's doing pretty good, it's not near extremes against US dollar for the last couple of years here. So again, you take that US dollar piece out and you get some really interesting trades And I know a lot of people, there's a cult following around that Aussie. And so take a look at pairing this Aussie against a couple of different markets here, and you see some potential intriguing pieces for those trend followers and those contrarians alike. Let's finish though by digging into that Aussie Kiwi, because this is one that is on a hell of a run the last month, up 300 pips from trading below 108 to just recently in the last day or two of trading, got up and touched 111 and is now just trading just below 111 here, depending on when you're looking at things. But really big run the last month on some of that Aussie strength that I alluded to, but also New Zealand Central Bank came out a little bit dovish recently. I don't think they've started to cut rates yet, but they are looking at that a little bit more aggressively than Australia's central bank, thus the weakness in Kiwi relative to that strong Aussie that you're seeing. But this is a really interesting piece that maybe you didn't see, and also a pair here for the traders out there, that when you look at some of these cross pairs, especially taking into account minor currencies like the Australian dollar and the New Zealand dollar, you might get some really wide spreads and some high margins. And I mean, let's face it, some relatively inaccessible markets. This is not one of those things. Now, is it as tight as the euro dollar? No, but it's tight enough, and the margins, I believe, will range from 3 to 5%, so relatively normal to some of those major US dollar pairs. So really worth looking at here, this cross as well as some of those major crosses, taking into account the pound and the euro and the yen, and maybe something that you haven't been looking at recently in this US dollar centric world, because we haven't seen that US dollar volatility the last handful of weeks. But take a look at those cross currency pairs.